So I would say sending out 5,000 cold emails is not going to yield the same results as spending the time kind of working your network and working their network, getting deeper relationships and getting the 5 or 10 or 20 warm introductions.
Hey, this is Aaron Price, and I'm so excited for this episode. Today, we're joined by Ben Novak. He's a corporate partner at Morgan Lewis, a large international law firm, but also he focuses quite a bit on smaller startups in the region. He's also an active angel investor through Delaware Crossing and some other groups. We're going to talk today about investment, getting attention, and how to get a deal done. Ben, thanks so much for joining us. Appreciate it.
Aaron, pleasure to see you. Good morning. Thanks for having me.
So we're in our studio in Jersey City, which is beautiful. This is a real view. As people are now, getting back into the real world, where are you physically set up right now?
Sounds good. So I generally, outside of COVID, split my time between my offices in New York, Philadelphia, and Princeton, New Jersey. Been working remote for most of the past 2 years, but I am actually back today in a physical office in Princeton, New Jersey. So this is not virtual here.
Yeah, here it's like a legitimate professional at the moment.
Crazy.
Yeah, imagine that. So let's talk about how to get attention as a founder trying to raise capital. So let's start with, where do you find your best companies when you're considering angel investments? What sources of deals provide the best potential deals?
Sounds good. And if it's all right, Aaron, I'll kind of start with kind of the companies that I invest in and where I find them. So I invest, so separate and apart from my role at Morgan Lewis, I'm personally an active angel investor. I do a lot of my deals through a regional angel group called Delaware Crossing Investor Group. Personally, my thesis overlaps pretty closely with Delaware Crossing's. So I invest in seed stage tech companies based on the East Coast of the United States, primarily in the Mid-Atlantic region. So Delaware Crossing overlaps. They look at the same geography, roughly the same stage, and a few different industries, but I'm primarily a tech investor. In terms of where we get the best companies, I would definitely say that it is a warm referral from someone who understands the type of companies that we invest in. So the co-investor to co-investor intro, I would say, is the best. Roughly 99% of warm intros I'll reply to, which flips the odds from a cold, not a warm intro where it's tough to get an investor's attention.
So for those who may not have those relationships and they are sending cold emails, well, one, should they at all, or should they just find a warm intro? Let's start with that. Is it even worth it?
Yeah, good question. I mean, so I often hear entrepreneurs say that all their problems will be fixed if they just had more money, talking about how their capital is their most limited resource. In my experience, their most limited resource is really their time. So figuring out how to efficiently allocate your time is very important. And as an entrepreneur, you really have to be strategic. So I would say sending out 5,000 cold emails is not going to yield the same results as spending the time kind of working your network and working their network, getting deeper relationships and getting the 5 or 10 or 20 warm introductions. So, I mean, does it work? Yeah, 1 in 100, 1 in 1,000, the cold emails do get through every once in a while, but it really is not the best way to go about spending your time. I hear a lot of people say that basically they don't have a network, so they don't have any option other than to send a cold email. But to those people, I say, build your network, focus there, get involved with organizations like TechUnited, find regional trade groups, put yourself out there, meet the people. And even if it's not the people that are going to invest in your startup, meet the people that know the people that might invest in your startup. Start there.
Yeah. So, obviously we host lots of events, which is one of the ways I've personally grown a lot of my own network. During COVID, it's been a little bit more challenging. Obviously, we've still run lots of virtual events, but the in-person networking it's just not replicated. It's challenging, certainly possible, but more difficult. So what advice would you give people, today specifically on how can they really build their network to get in front of people like you?
Yeah, I'd say a lot of people are in the same boat, right? So while some entrepreneurs maybe starved for their network and challenged in that they want to meet people, but there aren't the same number of in-person events as there was 2 years ago. I would say, everybody else on the other side of the Zoom is feeling the same way. They're also looking for a connection. They're looking to grow their networks. So in some ways, it's actually easier to get yourself out there in that all you have to do is in front of your webcam to participate in, a TechUnited meeting or, a meeting of say Silicon Valley events that are streaming, while previously you probably wouldn't have attended that tech meetup, you might be able to join that tech meetup from your coffee table now with a Zoom and a camera.
Yeah. So what's the best way to get your attention? Let's say you get the warm intro, or maybe you're dropping a cold email. Still, your time is a very valuable resource. How do you find it's the most appropriate way or the most effective way to get an investor's attention?
Sounds good. So definitely kind of the way to flip the odds is to get that warm introduction. The reason the warm introduction is so important is not because there's some clique of people that, just invest in people in that clique. It's that if I have a company referred to me by someone who I frequently co-invest with, they understand the type of companies that I invest in, right? So I'm not going to invest in a Israeli-based medtech company. Could be a very promising company, could give better returns than the other companies in my portfolio, but I just don't invest in those types of companies. The cold emails tend to be a lot of companies that may or may not be promising, but really is not an efficient use of my time or the entrepreneur's time because they don't fit within my investment thesis. When I'm getting the warm referral, I know that they're kind of pre-screened, pre-qualified in that, it may or may not be a successful company. That's on me to kind of place my bets and do my diligence, but they're at least the type of company at the right stage in the right geography, doing the right type of deal. So definitely, double underscoring, getting that warm intro. If you could get the investor intro, great. If not, service provider intros also. Your lawyers, your accountants, other people you work with, work those networks as well. If you don't have that and you can't develop that and you do go the cold email route, the biggest tip I would say is don't be too smart for your own good. Don't data drop, 50 paragraphs and 50 attachments in a LinkedIn message. Nobody's going to read that, right? Or at least if they do start reading it, they're not going to get to the important hook. One thing that I often see as a problem in those cold emails is they're focused on getting an investment, not getting to the next step in the investment process. So to get a check from an angel investor is a process. They don't, you don't just meet them in the elevator and they pull out their checkbook. It tends to be a process, right? So you start with that introduction and then you get to the next step and the next step and the next step. What those steps are kind of vary from person to person, investment group to investment group. I'm happy to talk about our process at DCIG if you're interested. But you should focus on getting to the next step in the process. So a cold email, there's a 0% chance I'm going to write a check on a cold email. However, there's a 1% chance or whatever percent chance that I'll take a meeting, I'll take a call, I'll take a video chat. So you really should kind of hook them with the important thing. So be short, be direct, and also to the extent that you could show that this is not a form email that you copied and pasted to every angel that you could find online, that's also helpful. So saying, hey, Ben, I was at TechUnited the other day at Propelify. I saw you speak on a panel. You said this, that resonated with me. Can we spend 15 minutes talking about that?
Yeah, that's a great point. Just to be clear, though, you're basically saying don't send cold emails. Find a way in, right? Find a relevant way in.
I would say the amount of time that you spend sending those cold emails can be spent more efficiently. And if you don't know how to build a network, focus on figuring out how to build a network, because the network isn't just helpful for getting a check, right? It's helpful for finding your co-founders, for finding your next software developer, for finding your advisors. Yep. So the time that you spend investing and building your network is going to pay dividends and not only increase the chance of you getting a check from an investor, but increase your chances of being a successful entrepreneur. In a way, it's almost, it's a slash against you when I see the cold email, because I think this is a person who can't go through other channels to meet me. And, I'm connected to thousands of people. And, if those people reach out to me, I'm happy to talk to people in their network. If you don't know anybody in my network at all, chances of you getting keyed into this ecosystem and building a successful startup, are lower than the ones that can get a referral from someone in my network.
If you think of it like a sales process, first of all, I want to reiterate your point. The goal in the fundraise is to get the next meeting, period. So whether you're talking to an angel group or a Series B VC, the goal is to get to the next meeting. But also, if you can't find yourself a warm intro, the chances that you could sell your own product are also pretty slim, because it's basically the same process. So if you can't find a relevant way in the door, you may have some other problems you need to address before you worry about raising capital. So let's talk about, and we've only got a few minutes to go here, but two things I want to touch on, which is the diligence process and then the follow-on opportunities. So let's first talk about the speed to close seems to have dramatically changed in the last few years. There's a lot more capital out there. I was talking to a VC last week. They now sometimes write a check within 2 weeks of the first meeting, which I was sometimes 10 days, which I was pretty impressed by. I'm curious, what's your diligence process like, and how has that changed since COVID?
Sure. Happy to chat. So to talk briefly about Delaware Crossing Investment Group's process, I would put it in a couple of different buckets. So I would say the first bucket is pre-screening. So that generally happens by a member of our screening committee. For those people that apply to Delaware Crossing through Gus, for example, our chair, Mark Mitchell, reviews all of those applications. The others kind of come to us day by day. There's about 40 of us in Delaware Crossing. We each get approached by startups. So the person who receives that tends to kind of do the pre-screening. From there, if it's referred to, so I serve on the screening committee. So if someone approaches me, I have a call with them. It seems like they're interesting. They kind of get past that pre-screening process and directly into what I call the screening process. Our screening committee is a group of individuals that screen companies every week. So at a minimum, we spend 60 to 90 minutes every Friday with entrepreneurs. And of those 52 entrepreneurs that we see hour-long pitches of a month, we pick from that group the people that will get to pitch at the full membership meeting that we do once a month. We generally have 2 new investment opportunities per meeting. And at that meeting, we soft circle our amounts. So we literally pass a pad and people can write down, pass, or, I'm interested in following on, or, I'm in for 25K, I'm in for 100K. So in that meeting, which, you could go from pre-screening to screening to the meeting within less than a month, let's say a couple of weeks, maybe even a week at shortest. But that kind of starts the next stage of the process, right? So what happens after we say we're interested in investing in this company and we have $300,000 that we're interested in investing in their Series C deal, we then create a deal team. And the process from there kind of is dictated by the company and the deal. So if it's a $2 million Series seed round and we're only putting in $250,000 and they already have the other 1.75 million, our process is very abbreviated, especially if the lead investor is someone from Broad Street or Jumpstart or Robinhood or New York Angels, the groups that we frequently co-invest with. If we could call the person who's the head of the deal team at New York Angels and see their diligence report, our process is very abbreviated and we could get to a closing within days or weeks. On the other hand, if it's a $2 million seed round and we're the first check in at $250,000, it's unlikely that we're going to want to write our check until you have the other roughly 1.75 committed. So it's a longer process. If we're taking the lead and drafting term sheets, negotiating documents, doing the lead on diligence, it could easily be weeks or months. So it really kind of depends on the opportunity. But I agree that a lot of these hot deals are getting quicker and quicker. I think part of that is just the nature of COVID. So, one of the changes in our process that you asked about was what's changed. One, it's easier to broaden your geography. At Delaware Crossing, I think we've at least currently made a decision to stay mid-Atlantic, but we've increasingly started looking outside of the mid-Atlantic region for opportunities. But in addition, one of the other biggest changes is that, I've invested in CEOs that I've never met in person. I mean, a year ago, 2 years ago, 5 years ago, that was ridiculous. I would have a second meeting in person. I'd have a third meeting over drinks, try to get to know the people, try to get to know the company. But through COVID, that really hasn't been an option. So one of the biggest changes is that a lot of those steps in the process can be back to back to back. The person doesn't need to fly in from Pittsburgh. They just need to log on to their Zoom meeting. So I think that's also added to the acceleration of the deal process.
Yeah, I totally agree. What's one that got away?
Oh, there's a bunch. I don't feel bad about the ones that get away, because if I invested in everyone that got away, I'd lose more money than I would make. But yeah, one VC that I work with in Philadelphia sent me a company a couple of years ago, and I was very hot on it, but kind of just didn't move them forward in the process quick enough. And literally they sold a couple months later for a roughly 30x. So, those ones hurt. But, if you invested in all the ones that got, I look at roughly 1,000, like personally, I look at roughly 1,000 companies a year for the 5 that I invest in. So in order to scoop up all those 30x's that I passed on, I would have had to make a whole lot of other investments, most of which would have gone to zero.
Look at you being very practical about your misses. It's all right. It's, I'm just curious if, I don't know, if there were some big ones, if like you looked at Slack or something day one or something.
There's been a couple public companies and 30x sales that I passed on, but I think it's important to have a thesis. If you start investing in all over the place, it's really tough to be diligent. And there's really great evidence to suggest that a diligent process and a diligent investment thesis maximizes returns and minimizes risk in the long run. So I'm not looking to do this for 5 years. I'm looking to do this for the rest of my life. So it's a process of deploying capital year after year after year and trying to maximize that IRR between now and the end.
Are you, I'm starting to see a lot of friends go through the SPAC process. Are you pro or anti-SPAC?
Like all things, it's not a one size fits all. I think there's a lot of opportunities. I think there's a lot of pools of capital out there right now. So for some companies that, that find the right SPAC in the right size where it adds value, I think there's some opportunities. But it's the pre-seed stage company that hasn't built a product yet. It's probably not a great time to go public.
Yeah, well, crazy things are happening, but yes. Last question. Obviously you have wearing 2 hats, which I think is a really unique strength. How does Morgan Lewis play into this process for you, and why should startups who are looking for counsel consider reaching out to you on that front and to Morgan overall?
Sure. I think at Morgan, we have there's a lot of large law firms and there's a lot of law firms that serve the startup community really well, but there's very surprisingly few law firms that really have the big firm resources that dedicate any significant amount of its practice to the startup and venture capital community. Morgan Lewis is one of those exceptions. We really do have an incredibly robust startup and venture capital practice with a global big firm resources behind us. I've worked at 3 different law firms over the course of my career. I've been at Morgan for the past decade because I think we just serve this segment of the market better than others. If people are interested in learning more about Morgan Lewis or our venture capital startup practice, happy to have that conversation.
Awesome. Well, I really appreciate first of all, your support with TechUnited for many years. And also, a lot of people don't know that I was very close to a different name change other than TechUnited. And I was this close, and you and I were at an event, and I was sharing with you, and you're like, you know what, I think that's a big mistake. And so I took that very seriously, and we changed course really based on that feedback. So Ben has wise things to say. You all should get to know him, and maybe he'll invest in your company. Appreciate it.
Well, fortunately, we're good friends, Aaron, so I'm happy to be blunt with you. The 98% of the time I agree with you, so it's easy, and the other 2% we'll have a conversation.
I appreciate the feedback. We like to end on the high five. So, by the way, also appreciate the fall theme you have going on with the leaves and mini pumpkin at the desk. That's a like next level move at the office.
Yeah, I dressed up and everything. I showered this morning, put on a shirt, just got the special deal here.
The whole deal. Well, it's good to see you. We like to end on the high five. So 1, 2, 3, boom. Take care, and we'll see you soon. Thanks a lot.
Thanks. Cheers.